Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. At Investor in the Family Radio, we believe that every dollar and minute we spend is an investment in something, and together we want to make the best investments that we can, so thank you so much for joining us. And today's show is going to be a little bit different and hopefully a little bit special as well, because for those of you who have been following us for a while here at Investor in the Family Radio, you know that the hallmark of this show has been interview podcasts, where I'll sit down with an investor I respect or an investor that I'm wanting to get to know more, and we'll sit down and we'll just talk about investing. And I'll talk about their approach to investing, how they find good investments, research good investments, what decisions they go through to help ultimately make it an investment, and then just overall their perspectives on the markets and whatever their specialty may be. And so I love to just sit down and talk with them and learn from them, and then record that and pass it on to you. So hopefully you can learn from them just as I have. And for me, it's been really a pretty amazing educational experience, and I hope it has been for you as well. And as this show continues to grow, and as I continue to grow as an investor, I want to make sure this show continues to offer more and more value to you, our listeners. And so the interview podcasts will continue to be a hallmark of the show. Those aren't going away. I actually have plans to hopefully increase those and change the variety of those to make them even more valuable to you. But another thing is, and also we've gotten some feedback from some of you as well, that for more solo shows, and I want to have some more solo shows where I'm talking about what I'm learning as an investor, what I'm up to, what I'm thinking, what challenges I'm facing, what mistakes I've been making, and what opportunities I see as well. And so today will be really the first of what I hope to be many more solo podcasts like this, and I hope you'll enjoy it, and I look forward to your feedback as well. You can always reach me at Brian with an I, at investinthefamily.com, so be sure and shoot me an email. Let me know what you think. And remember, our goal here is to help you learn to invest financially and in all of life. You can always find more at investinthefamily.com. And as you've heard me say for a long time, the average self-directed investor earns annual returns of around 2.9%. That's terrible, right? One of our goals here is to help change that. And I believe we have a resource called the Purchase Filter that can be a game changer for you and a game changer for me. The whole idea is it's a simple checklist you can go through before you ever make an investment, especially an equity investment, to help you filter out bad decisions and help you filter out emotional and irrational decisions and make sure you've done your due diligence and you're making good decisions. And I've actually recently updated this resource, so anyone signing up for it now will get the newest resource. For those of you who have the old one and are on the email list, every week I send out an email, and at the bottom it's got a little link to the sign up bonuses, so you can be sure and get the new updated version there if you would like it. If you want this resource, simply text the word filter to the number 44222 or sign up over at investorinthefamily.com. We'll make sure to get you set up. Also, if you are an avid listener of Investor in the Family Radio and looking for a way to support the show, first of all, thank you, and we have great news. You can support the show for free every time you shop at Amazon. All you need to do is, instead of going directly to Amazon.com, go to investorinthefamily.com/Amazon instead, and you'll be redirected back to the normal Amazon site, and everything will be business as usual for you, except a small percentage of each sale will come back to us and Invest in the Family as like a referral fee or commission, and no extra cost to you at all. So thanks in advance for your support, and I hope you'll enjoy today's show, which we're going to talk about investing in or purchasing high dollar newsletters. Specifically, should you pay $1,000 for an investing newsletter? I know you've seen them. If you've been investing for any period of time like I have, you've seen those newsletters. They're $1,000 a year or more. What should you do? Well, expensive investing newsletters, they stress me out. I'm very averse to paying high dollar prices, but at the same time, I can't help but wonder if it's worth it in the end. After all, in my experience, in most cases, I typically get what I pay for with stuff like this. If I pay $50 for an investing newsletter, well, then I usually get $50 of value, and I don't get great research. I'm not getting great picks. I'm not getting great education in most cases. And I have spent higher dollar amounts on investing newsletters in the past, and they've been exceptional. There have been a couple of misses, unfortunately. I won't get into the details of those now. But for the most part, I feel like I've received what I paid for. But either way, I want to help bring some objectivity to this, and I've been attempting to figure out how do you weigh the value of an investing service, particularly those in the $1,000 plus range. So if an investing newsletter costs $1,000 a year, how do I know if it's worth it? So, for example, if the research or the stock picks from that service result in $1,000 profits for the upcoming year, does that mean I've broken even and it's paid for itself? So pay $1,000 for a newsletter. I get picks from that newsletter. And if I invest in those picks and make $1,000, is it a wash? If, at first glance, that seems like, yeah, that's seems to kind of pan out, but I want to look into that a little bit more because I don't want to make assumptions. One thing, let's think about this as an advisor fee. If a typical financial advisor charges a 1% fee, which is not unusual, and say you have $100,000 in your portfolio, well, at a 1% fee, you're paying $1,000 a year. In that case, the investing newsletter would be the equivalent of a 1% fee on your portfolio or your assets under management. But that being said, you'd be really disappointed if you only generated $1,000 for the year, right? Well, what if you only have $20,000 in your portfolio? At that point, if you spend $1,000, that's the equivalent of a 5% fee. And that would make it a terrible, that by itself, that would be a terrible idea if that's all that you're thinking about it, because in most cases, people would assume an 8 to 10% return on your portfolio each year would be a pretty healthy return over a lifetime. But if you're spending 5% of that on fees, then you're dramatically undercutting your profitability, and basically you can't do that. But does that make it a terrible idea? Would you intend to base your entire portfolio on a single service? Most likely not. So that's not exactly the easiest way to compare things either. So what if the service is about more than profits and returns? Or what if you're learning a lot? And what if you're becoming a better investor as a result of being a part of it? That's another angle to throw into this, because sometimes as we're looking to learn and become better investors, sometimes paying for a high dollar newsletter, even if in theory it doesn't pay for itself right away in terms of monetary returns, if you're learning what it looks like to be a great investor, you're learning how that investor operates, how they think, how they research, how they do things, it could be worth it in the near term to pay a little bit more for it. Again, ultimately that decision is up to you, and you need to be able to decide what you're looking for and what you can afford. Okay, so what do I think? How do I approach this? Well, caveat here in the beginning, I'm not finalizing how I view this. I'm just trying to think of what's an objective way to at least see what would a break-even cost be to determine whether or not a newsletter is worth it. So here's what I think right now, and I'd love to hear from you and let me know whether or not you agree, you disagree, if so, why. And again, my email is Brian, that's BRIAN @investorinthefamily.com. Okay. At first glance, I want to take the view that if the newsletter at least generates enough returns to cover its cost, then I'd be satisfied. That's how I naturally think about it. Ideally it would do much more, but at a minimum, it'd pay for itself. So, in a minute, you're breaking even, right? The problem with that view is it doesn't factor in opportunity cost. So, for example, if I have $1,000 for investments in a year, just as an example, and I can either use that $1,000 to pay for an investment newsletter, or I can invest that $1,000 directly. Well, if I spend on the newsletter, I've lost what that invested money may have returned, right? So for example, if I put that money in the stock market and it would have returned 10% for the year, then that 10% is lost if I only get $1,000 back on the newsletter. Perhaps a better view would be that if the newsletter would be worth it if it returned its full cost, in this case $1,000, plus your targeted annual rate of return for the year. Here's an example. If your targeted annual rate of return is 10%, then the investing newsletter would need to result in returns of $1,100 after 1 year in order to break even. So that way you're making $1,000 that paid for so the newsletter paid for itself, but then you're making an extra $100 to represent that money. So that way, if you had invested the $1,000 directly in the market, at the end of the year, you would have had $1,100. So if picks from the newsletter result in gains of $1,100, then they've been worth it. Okay, so that's one way of thinking about it. My ideal is that if I spend $1,000 on a newsletter, that I would want it to pay for itself twice. So basically, in this case, that would be earning $2,000 by the end of the year. In this case, it would most certainly be worth its cost, in my opinion. And so, but I want to hear from you. How do you approach this? What is your mindset? Am I missing something here? It seems like there's a lot of factors that could go into it, especially if you're investing in more than one newsletter. How big is your portfolio? What are your long-term goals, and what are the returns from these different newsletters as well? There's a lot of things you can throw into the mix, but that's how I'm viewing it right now. And so at a minimum, I'd want it to return its full cost plus my targeted annual rate of return. But ideally it would pay for itself twice in a year. And so this has really been applicable to me specifically because there have been a couple of situations last year where I've been faced with this, One, there was a newsletter, Chris DeMuth's Sifting the World newsletter on Seeking Alpha, was $1,000 a year. And that rate was going away at the end of December 2015, and it was going up to $2,500 a year, which is a whole new world of, I don't know how to handle that. But so back when it was $1,000 a year, I wrestled with, is this worth it? Fortunately, in that case, there was a 2-week free preview and a prorated return rate. So basically throughout the year, if I decided it wasn't worth it, I could cancel it and get a prorated amount of money back. Or basically the unspent money would be returned to me, if that makes sense. So I really appreciated the way that reduced the risk of that newsletter. So I actually did take a swing at that one. And I can tell you more about what I think about that in another show. But so far, I will say I've been very pleased with it. And I highly respect Chris as an investor, and his service highly reflects that as well. Another one that I've been, has come across my plate recently has been from James Altucher. Some of you may or may not be familiar with James Altucher. He's not necessarily the more traditional investor that you may see on some of the more traditional investing websites, but he has a very experienced and apparently successful track record as an investor. And he's more recently become known as just a general kind of a lifestyle blogger. And you can find his stuff all over the internet if you just search James Altucher. That's Altucher. And I'd already subscribed to one of his lower dollar newsletters that wasn't an investment newsletter, but more about a small business, online business newsletter, which I've found very helpful for idea generation and ideas for making money online. But recently he's released a service called the Altucher, the Top 1% Advisory, and it was $1,500 for a year. And again, so for me, I'm like, okay, no, thank you. I don't even want to touch this, right? But I come back to the question, what do I do? What if it's worth it? And so again, I always look for, is there a money back return? How long does that last? So the whole idea of, can I make, if I purchase this in the front end, can I get back out of it later on once I've seen what they have to offer? And this one did have a 30-day money back guarantee, or maybe 60-day money back guarantee. So I have no problem purchasing it, investigating it, looking into it, and seeing whether or not it's worth it. And so I'm currently still investigating that, and I'm still within the refund period and have not made a final decision on that one yet either. But those are a couple of things that have been in front of me. And obviously there's a number of other newsletters that I have access to or subscribe to. If you ever want to have feedback or have questions about any of those, I'd love to talk to you about them. Or if you're looking at one yourself, you feel free to and shoot me an email and let me know what it is. And I'm glad to give you my thoughts. If I've seen it, there's a good chance that I have. Either way, that's how I approach the question of, should I or maybe should you spend $1,000 on an investing newsletter? But again, I want to hear what you think. I want to hear if that's something that you have done. Have you had a bad experience? Have you been burned? Have you had a great experience? Let me know. I want to know, maybe there's something good out there that I'm missing, or that we can help protect our guests, our listeners from as well. So if you enjoyed this podcast right here, it's also, a lot of the content is on an article I just wrote and released at investinthefamily.com. You can hopefully enjoy that there. And also on that article, I've got some other content I think you'll enjoy. Also, a new segment I'm adding in Around the Web this week, which has some different articles that I've seen as I'm going through a lot of content every week that I feel like have been worthwhile and valuable that you might enjoy as well. But either way, that's a show for today. I hope you've enjoyed it. And remember, you can always get full show notes. Well, actually, in this case, the full show notes are the article, so just check it out at investinthefamily.com. If you want to receive the purchase filter, simply text the word filter to 44222 or visit us at investinthefamily.com and sign up there. Don't forget to go to investinthefamily.com/Amazon instead of Amazon.com to help us out a little bit also. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.